Global growth forecasts are up for the time being. Luxury is finding its footing, and banks are riding the AI wave. But will brands ride along or pull back? You're listening to the Media Intelligence Podcast from WPP Media. I'm Kate Scott-Dawkins with Jeff Foster and Nidhi Shah from the Business Intelligence team, and each week we unpack the biggest stories in media and marketing and why they matter for brands. So we're going to kick off this week with sort of around the globe look at finances, the economy, how people are feeling. We've really gotten into the teeth of earnings now with all the banks reporting this week. But I think let's start with the updated October forecast and world outlook from the IMF.
The IMF raised their global real GDP growth forecast for this year to 3.2%. And really, it's might be a surprise for some, maybe not for some, kind of citing resilience and kind of muted inflation. But the overall messaging I got from the reading of the report was tariff impacts are less severe than expected. There's a bit more clarity as well, as we've seen in recent months across markets. And that's kind of aligning to what we mentioned about, right? Beginning of the this year, next year report and our base case scenario when thinking about these advertising forecasts. So I think we can give ourselves a bit of a pat on the back for now.
Yeah, I mean, there were, subdued inflation other than the US. They were, I think, quite keen to call out the debt situation in the US and how unsustainable that was. And I think the note was, yes, it looks better for now, but really this kind of level of volatility is ultimately not great for long-term growth, which really tallies as well with some of the statements from the Nobel laureates in economics recently who were awarded the prize for their work on what contributes to sustainable growth around innovation and things like openness. And so that was a big theme there in that commentary as well. Mulkir and Ayan and I'll come up with a third name in a minute. But I think really interesting, and the themes there around openness, innovation, creative destruction, which has been a long time theme of the work within TY&Y, both within our team and my predecessor, Brian Weiser. So definitely some watch outs in terms of, yes, we haven't felt the impacts yet, but everything that economists, I guess more broadly, have kind of studied, and the recent noted economist work around growth points to the health of openness. And so, what does that say about the potential going forward if there is more decoupling and closed borders?
They did mention about consumer prices still being expected to rise, especially in US and markets such as the UK. We're already seeing that in the headline inflation numbers. I think what was also interesting was the perspective on China and how that economy is doing despite the tariff situation, and a lot of that forecast being unchanged because of currency depreciation, export shifts to markets such as Europe, regions such as Europe, and also the kind of fiscal expansion policies that some are debating whether that will continue to lead sustainable growth because there's been a lot of subsidies within the market. But the outlook is still expected to be a little weak.
Well, the China piece is fascinating, right? We just got September export data and import data, and the exports climbed in September to their fastest pace in 6 months, 8.3% in US dollar terms from a year earlier, and which was above, well above sort of economist estimates. At least this is a Reuters piece that we're at 7.1%. So quite significant. Imports jumped 7.4% last year from a month ago, sharply beating Reuters estimates for a 1.5% growth. So yeah, I think we're now working at what that means for spend and ad revenue in these other markets around the world, right? If we're talking about exports growing hugely in markets like or regions like Africa, Southeast Asia. We've talked before about the rise in Temu advertising in markets like Brazil. And so when we're starting to get into the Meta and Google earnings and Snap and some of these companies that give us the difference, especially between the revenue by customer billing address and revenue by user geography. That's going to be one of the key things we're looking at is how much can we see where this shift in China outbound advertising is heading.
One such example this week was LVMH. They reported organic revenue growth of 1%, which may seem small, but it's still a shift from the previous quarter decline. And they mentioned about growth was more driven by volume and traffic as opposed to pricing, with improvements in US and Asia, excluding Japan, indicating slightly better conditions in China within their core. So we can definitely see that in some of the results coming in this week.
I think that was a very welcome piece of earnings for the entire luxury category. It's just because LVMH tends to be a bit of a bellwether for how big it is and how early in the earnings season it tends to report. And so I know a lot of people were watching that one in particular. We also had a bunch of banks reporting last week. I mean, I was watching the headlines tick in on Bloomberg daily for these sort of otherworldly growth figures there.
Yeah, lots of markets and indices going up on back of the news as well. I think it's really interesting, really, this year for financial services in general, and particularly banks. You know, you hear a lot in terms of the tariff situation and what impacts that would have on the broader sector, on lending and M&A and IPOs, and it feels like the complete opposite story. The US economy, according to the banks reported this week, shows some level of resilience, and that's evident through some of the bank earnings with kind of broad-based growth in the third quarter. So we're hearing about margins improving, a surge in investment banking, which typically benefits from kind of all this market volatility we've been seeing in recent months. I can say that from my own personal experience, having worked for an investment bank. We've been seeing and hearing about increased M&A activity and bank loan growth, especially benefiting from kind of this AI investments and boom that's allegedly happening at the moment. So I think some of these trends might possibly be expected to continue into 2026, especially if you think about AI investments. And that's an economy in itself, Kate, you've mentioned before in the podcast.
Yeah, no, I think a lot of this, I mean, some of these new IPOs certainly helping. I think that helps put some gives money to banks, obviously. And there'll be more deals to be had and deals to be structured. And then I think it also starts to relieve some of what we had been seeing this backlog of giving money back to investors for a while, where there was this dearth of IPOs for a long time, which then I think sort of rekindles the cycle or maybe makes them a bit more willing to hang in with investments potentially into some of these big AI companies like an OpenAI that are needing a lot of financing in order to continue this cash burn of running these big models because they've had returns now in other places potentially. So just something I've been noodling on as we look at how sustainable is this continued growth within the AI industry as well.
At the moment, some of the kind of downside risk as well is, whether this level of growth can be sustained beyond 2026, and especially if there is a significant asset price correction, or if AI investments don't go the way, because not every company can be successful. So it's something I'll definitely be keeping a close eye on. Another thing that I have been keeping a close eye on is the kind of advertising spend growth for this sector, which has been pretty resilient. Marketing spend growth for some 6 of the banks that reported this week and that disclose advertising and marketing spend saw an acceleration relative to the second quarter. But despite the kind of ongoing revenue and marketing growth, the kind of share of this spend as a percentage of total revenue has been pretty stable. It's either stayed the same or declined for some of the companies, really indicating that maybe there's a lot of focus on efficiency as well when it comes to marketing and kind of a strategic shift in spending priorities. And I've heard about some of these banks talking about spending towards AI and kind of that being a driver of long-term efficiency. But benefits of that, really investment accruing gradually and implemented with obviously a lot of regulatory rigor.
Yeah, I mean, there are breakdowns, but I think exceptions to this rule that we tend to talk about, which is that as companies look at marketing and advertising as a percentage of revenue, that tends to be a ratio that they watch and maintain over time, maybe except when we have these sort of extenuating circumstances around massive growth that's, maybe, temporary or not permanent. We're talking about extended volatility this year or a crop of IPOs. We may not expect to see the advertising growth keep up necessarily with these sort of really big revenue growth numbers. It'll grow, but maybe not necessarily in quite the same proportion. And then we see that even out over future years. So I think that all sits still well within our framework for these financial services companies and that category of advertisers. Cool. So, anything else to take away from what this means for brands and ad spend? Are we still likely to see additional pushes into CTV, probably, right? As that gets more addressable, as long as the regulatory considerations are kept intact. And then I know a lot more companies looking at ways to use their data within marketing on the ad seller side as well, right? There were some announcements from MasterCard within the last couple of weeks. So lots really to keep digging into there. We'll have more on that in the this year, next year, end of year report as well. And while the macro picture is showing some resilience, the AI sector is some growing pains, starting with one search startup hitting pause on ads, or at least looking again at what that might mean for their company. Perplexity has announced that it is stopped accepting new advertisers as it rethinks how ads fit into the AI search experience.
Yeah, so this was definitely one of the first bumps along the road to monetization that we've heard and reported in the media. So, according to Jessica Chan, who's the head of their publisher partnerships at Perplexity, she said that the company is not taking any new advertisers and that ads aren't currently on the roadmap for Perplexity's AI browser called Comet. I guess, is this just, like a small bump in the road? Is this, are we going to see a little bit more of this down the road as companies are figuring out how this monetization works through advertising?
Yeah, this is a big piece of what I spent this past week on is really building out our thinking for what the future of search and intelligence looks like. Yes, over the next 6 to 12 months, that's going to be a big piece of our forecasts and part of what we're talking with all the markets about, part of what I'm having a lot of conversations with clients about and how they're viewing this, but really also over the next 5 years and which companies in this space are poised to be winners. And what does that look like? What are the capabilities that a company would need in order to utilize AI in the best way, make the appropriate integrations between commerce and media? What does that look like? And so working on a framework of capabilities, some scoring, and then looking at a bunch of different companies in terms of how they're placed over this future of search timeline. So that's been a lot of fun. More on that to come. But I think, Perplexity without its own foundational model, with an initial launch that was sort of CPM based pricing for ads rather than a more outcome based pricing system for ads. That was always going to be not a sure thing, I guess.
Yeah, I think you're exactly right. And we should also note that, what their advertising revenue for Perplexity is pretty material by most accounts. Some reports have it fairly low dollar. So this is still in the initial stage. But it was also really interesting to note that Perplexity also said, to provide a little bit more color on their decision, that advertisers are moving away from performance-based traditional search and towards top-of-funnel brand awareness, and that's an area that Perplexity may pursue down the line.
There's always what companies say to the market because that's, the message that they want to put
Right,
out there. But that is very much what those sort of CPM based ads were already. So
right.
I'm somewhat confused about there's always an angle, but yeah, I find that a little bit difficult. I think the information had it at only 20K or something really
Yeah,
small.
some
Yeah.
reports have been that 20 to 30,000 range. Yeah, not a huge chunk of revenue.
Yeah. All right. Well, we do think, though, that it will be material for a bunch of companies, including the big players in this space already: Google, Amazon, Microsoft, Meta, others. So just depends on how many new players we get into this space. And I think also keeping an eye on the China-based companies like Tencent and Xiaomi is going to be really important here. They have their own cloud products, gaming, big install bases of hardware in Xiaomi's case, or gaming WeChat super app in Tencent's case. So it can be really interesting to look at different models and different geographical representation when we're thinking about what this future of intelligence might look like and the different methods that companies might take to get there. Is it purely a UGC and AI lack of hardware positioning, like what a ByteDance might pursue? Or could a hardware first company like Apple or Samsung break into the sort of upper rankings alongside Google, Amazon with the right kind of AI investment? So really, really fascinating. It's going to be such an interesting space to write about in our forecast, and then also to watch how it plays out over the next couple of. Speaking of AI and commerce, one of the biggest retailers in the world is betting on conversational shopping happening inside ChatGPT. There was the announcement between Walmart and OpenAI this week as well that grabbed a bunch of headlines. Jeff, what did we learn from that one?
The Walmart CEO said that their current online shopping consists of a search bar and a long list of responses, and that's about to change, meaning you can go into ChatGPT and get product recommendations for Walmart. That feature is going to be rolling out in the fall. They said it'll offer an extensive list of Walmart items as well as clothing, entertainment, and items from third-party sellers. And items from Sam's Club will launch soon after, so probably later fall or into maybe early next year would be my guess. This is, again, we're going to start seeing more of this, but I thought it was really interesting that he signaled out that kind of calling out the search bar, maybe meaning Amazon. Is that a way to interpret it? Maybe.
I mean, famously, Amazon has not allowed crawling and is not going to make their products, or has not yet made their products available within ChatGPT. I think it's fascinating. We look 2 years back and we were speaking quite favorably of Walmart, the Vizio acquisition, really looking to Amazon's plays and copying them, or going after the same kinds of things in order to scale and create a really interesting advertising product and offering. The problem is that now in the last 2 years, with how important AI has been and how much of a head start Amazon has in that arena, and the kind of capital it would take for a still majority low margin business like Walmart to even approach that it's just not feasible. So
Yeah.
they're looking at a sort of different position where they're going to maybe look at supporting others' ambitions in this space and offering the commerce side of things, maybe partnering with a few different companies, really, but probably not the ambition or the checkbook to go out and compete on owning the entire experience like an Amazon could or a Google could.
Yeah, yeah, and I think it's interesting. We should also note that Walmart's going to use OpenAI's recently announced instant checkout tool, so everything will be seamless within the ChatGPT ecosystem. And OpenAI has had similar partnerships, as you alluded to, with Etsy, some smaller companies, also Kim Kardashian Swims, the athleisure brand Viore. Will also be available soon. So they are testing it out. You're right. It's still early stages, but there's an interesting note in the Wall Street Journal that they pretty much called out that Walmart and other retailers have traditionally worked to keep purchase data for themselves, using it to expand or to sell it to advertisers. And OpenAI will now have access to that data on Walmart sales on ChatGPT. So that was a little bit of an interesting, tidbit.
I mean, look, for the immediate future, that's going to be a very small representation
Right.
of Walmart. When you're Procter & Gamble, Unilever, and Walmart accounts for some of these companies. We have the data. I don't have my spreadsheet open in front of me, but I sometimes keep track of the companies will actually report their largest customers, right? Concentration
Right.
risk. And for some of them, Walmart is low teens to
Yeah.
low 20s
Right.
percent of total purchase volume or revenue. And if we think about e-commerce being only 20% of retail sales anyway. I mean, yes, probably more for beauty and some things. And then, purchases within ChatGPT are going to be an even smaller percentage of that. It's not going to be the majority of what Walmart has in terms of their advertising data or sales data to offer to companies. But I think it's smart in this evolving landscape,
Yeah.
I guess, to be in that position because you don't hold the same position as an Amazon.
Yeah, I think you're right. It probably, is very small early on, but as we start thinking about our forecast 5 years down the road, definitely will be interesting to keep an eye on this and how it grows and what they start reporting on this partnership.
I think there's also the consideration, as you mentioned, Kate, on the 20% e-commerce, right? We had COVID, and that meant that the e-commerce penetrations for some of these companies increased. Does that mean that the AI boom will cause this kind of spike as well in the coming years?
This is one of the points of pushback that we got in our Advertising in 2030 survey from experts. We asked there were a couple of questions. One was about, products and services being bundled, and another was about consumers and brands having a majority of their interactions via bots, right, rather than humans. There were a lot of comments in the responses around just how much shopping still happens on your way home from work when you pop into the store, or a physical interaction. You want to go touch a product before you buy it. So I do think we're not likely to go from 20 to 40% overnight, certainly. I think the bot to bot piece, though, has to be considered more broadly than just the path to purchase, because so much of a brand's engagement and relationship with a consumer happens all the time. Post-purchase, loyalty, refill opportunities, cross-sell, whatever, right? So I still think it's the right answer that companies can use what they know about consumers and people to message smartly to them. Again, financial services, we were talking about banks earlier, that's very hard to do for them because of all the regulations. They might know that someone is a mortgage holder, but the sales team maybe won't know exactly whether they hold the mortgage or another bank does, right? So that adds complexity. But the ability to talk to consumers, hopefully as if you know them, and maintain conversations and touch points at scale because you're benefiting from AI and the sort of always on nature, or the ability to use agents and bots, I think is coming for sure.
Yeah, I think definitely more proactive and personalization, and that feature of being dynamic is a thing. It'll be interesting to see how much of that shift translates into online activity for some of these retailers, and what that kind of translates to in terms of advertising data, and kind of revenue coming from these kind of new sources and new platforms, as opposed to just physical stores in the future.
All right, well, platforms and partnerships. There's one more piece from the news this week we should touch on in that vein, and that is Netflix and Spotify announcing a partnership on video podcasts. Jeff, what's the headline on that one?
Yeah, so we've been talking about video podcasts for a bit here on our podcast, but the partnership will bring sports, culture, lifestyle, and true crime podcasts from Spotify Studios and The Ringer, which is a production company that they own, onto Netflix to complement Netflix's existing program, according to their press release. So these video podcasts will be available on Netflix in early 2026 in the US, and rolling out to additional markets shortly thereafter. So, this isn't a surprise. Netflix has been talking about getting involved in the video podcast space for quite a while, and Spotify has encouraged podcasters to distribute their shows as video podcasts. And YouTube has, of course, been a major platform for video podcasts for a while now. So I think this is, it's a smart move, and many of the podcasts in the deal are from The Ringer, which we should also bring to note that Spotify acquired in 2020 for $250 million, according to Variety. So Spotify is definitely looking to monetize this investment. I'm sure this will probably help that as well.
Yeah, I mean, they're really starting to look at the full complement of content, aren't they? The entire spectrum, from premium long form, professionally produced content where they started into now that middle space of podcasts, which, if they're earning revenue, that still professionally produced, mostly video podcasts, and then into things like transitioning personalities from traditionally UGC platforms like YouTube into the professionally produced, or at least the Netflix platform, right? So again, spectrum of content, something for everyone, variety of production costs associated with all of those different types of entertainment, and really looking at, I think, at YouTube's breadth and depth of content
Yeah.
too,
Yeah.
and what that's been able to do for them in terms of, again, how much time people spend with different platforms
Yeah.
on CTV.
Yeah, as we kind of talked about in the past, how video podcasts are essentially becoming sort of like daytime television equivalent. What it was like here in the US is just, interview type of panel, topic of the day type of formats. So it's going to be interesting to see this. And just thinking from an advertising perspective, there's a lot of different ways an advertiser could advertise on the same podcast, whether it's a direct sponsorship on that podcast that's embedded in the content, whether it's advertising through Spotify or advertising through Netflix now. So there's a lot of different angles, I guess, you could take to, that would fit into your marketing strategy for this type of content.
Yeah, well, and add some complexity to the this year, next year forecast as well, right? Because now where do we put this revenue and how do we make
Exactly.
sure we're not double counting between Spotify and Netflix? And
Yeah, the lines continue to blur, and what is video, what is audio, what is, makes you think of like, maybe in early days of MTV, is it a video, is it music, is it audio, is it both?
yeah, just roll it all up and make everything AV, and then we'll
Right, right,
be
which I
done with
think
it.
better fits our new defined content category, which,
Yeah,
makes
yeah.
a lot more sense.
At a higher level, we're okay because the top
Right.
level item is content and everything will sit
Exactly.
under content. And we can debate about,
Right.
whether there's a little bit of, I don't know, spillage across the lines between audio and video, but ultimately
Exactly.
it is still content driven advertising. And yeah, so look, we're projecting streaming TV to grow to nearly 72 billion by 2030. So lots of room for all of these companies to be playing in that space.
Yeah, absolutely.
All right, well, looks like growth is proving to continue to be resilient this year for the most part, at least in some sectors. I think there's still, again, we're going to get a lot more commentary in the coming weeks around what elements of the US population in particular, but consumers worldwide are feeling more of a pinch than others. But I think what we're seeing really driving growth has been AI, the commerce tie up with AI, political. Oh, we were going to talk about political. We were looking at political this week. We'll come back to that in one second. Certainly financial services, and then sort of the start of the recovery in luxury. And also we'll hear from Kering next week. That'll be another good proof point for the luxury recovery. And then we have Netflix, Coca-Cola, L'Oreal, Univision, Kering, Rogers, Chorus, Atres Media, P&G. So a bunch of earnings next week to get to. And yeah, I think we'll start to hear more and more too about political advertising, especially in the US, just as a PS, a postscript note, because I forgot to add it into the doc. But yeah, we were looking at the most recent figures, which are ending in June of this year for political, and the growth versus 2 years back is down, as you would expect, right? But what has been, I think, fascinating is the 4-year growth was a plus 23% figure in terms of total disbursements across federal fundraising. So Senate, House, Presidential, Party Committee, and PACs altogether up 23% versus the 4-year ago cycle. So versus where we were before the last midterms. So that's not a direct translation into advertising, but a really good note on what we're seeing early. And I think we're hearing similar things from media owners as well, aren't we?
Yeah, we have been hearing that this could be a record midterm cycle in the U.S., and our initial analysis of the data sure seems to support that. So it looks like it might be on pace to, I mean, maybe even surpass a presidential election, which would be incredible. But there's definitely a lot of money out there.
All right. Well, that's it for us this week. Thank you for listening to the WPP Media Intelligence Podcast. Don't forget to subscribe. And if you have any questions for the show, you can reach out to us at business.intelligence@wppmedia.com. The Media Intelligence Podcast from WPP Media is meant for informational and entertainment purposes only and should not be considered financial advice.